Dogecoin is not just holding a price point, it's fighting for survival at a critical juncture that could define its next chapter. For months, the cryptocurrency has been locked in a tight consolidation phase, but now it's pressing against a long-term support level that has repeatedly proven decisive in past cycles. If this Dogecoin support level holds, history suggests a potential rally could ignite. But if it breaks, the consequences could ripple far beyond current holders. Since 2013, Dogecoin has defied expectations, evolving from a meme into a market force with real liquidity and influence. Its price trajectory has always been volatile, often swayed by external sentiment, especially high-profile endorsements like those from Elon Musk. But behind the noise, a more durable pattern has emerged. A persistent ascending trendline on the monthly chart that has acted as a floor during downturns. This trendline is more than just a line on a chart, it's a psychological and structural anchor. Every time Dogecoin has bounced from this zone, momentum followed, and every time it failed, deeper losses followed. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Now, with price hovering near 0.118, that same Dogecoin support level is under fresh pressure. The current setup reveals a market at war with itself. On the surface, recent movement looks like a recovery. Prices rose from March lows, testing resistance at 0.118. But deeper analysis shows this rally lacks the structure of a true reversal. Technical patterns suggest it doesn't conform to a classic five-wave bullish impulse, which means this may be a corrective bounce rather than the start of a new leg up. That distinction matters. A correction implies exhaustion, not conviction. Traders watching for a breakout above 0.133, the 38.2% Fibonacci retracement, know that without strong volume and follow-through, any move higher could be short-lived. The resistance isn't just a number, it's a gauge of market willingness to commit. Here, what most miss. The real story isn't just price, it's what happens beneath the surface. The Dogecoin support level isn't just a technical detail, it's a litmus test for market confidence. If this zone holds, it reinforces the Doge bullish outlook and keeps alive the possibility of retesting higher targets at 0.156 and 0.183. But if sellers overwhelm buyers and push price below 0.105, then 0.089 becomes the next defense. The stakes are clear. A sustained break could confirm a failed recovery, triggering cascading stops and reinforcing bearish sentiment. The important part is not just whether Dogecoin bounces, it's whether the bounce has strength. Right now, volatility remains contained, which suggests uncertainty, not momentum. Moving averages are flat, and price is coiling near key levels. This kind of compression often precedes explosive moves, up or down. But until there's a decisive break above 0.133 with volume or a clean rejection at support, the market remains in suspense. The Doge market behavior reflects a broader crypto trend. Assets are consolidating, but the next move could be sharp. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And that leads to the central contradiction. Despite years of price action, Dogecoin's future volatility is still driven more by sentiment than fundamentals. There's no protocol upgrade, no new utility, no institutional inflow to point to, just technical structure and social momentum. That makes the Dogecoin consolidation phase especially fragile. Any shift in narrative, any tweet, any macro move could tilt the balance. The Doge recovery chances depend less on charts and more on catalysts we can't predict. So what should you watch? The next signal isn't hidden, it's price itself. A close and hold above 0.133 could trigger a Dogecoin resistance breakout, relieving pressure and inviting short-term bulls. But a drop below 0.105 with increasing volume would confirm weakness, putting the entire Dogecoin long-term support in question. Until then, the market remains balanced on a knife's edge. The Dogecoin isn't just a line, it's a line in the sand.